sure. We are streaming, I think, to 2 YouTube channels and Twitter, which is
We are.
exciting.
Yep.
And
It's nice to
I'm
meet you,
super,
Felix.
you too, Jesse. Super nice to finally have you on screen. If you don't follow Jesse, you can see his Twitter handle and his YouTube handle there on the screen. He's more organized than me. Give him a follow. That's how I found you. You were putting out incredibly insightful content, especially on PayPal, but also other subjects. And I thought, let's have a chat and let's see, especially with the frustration around PayPal the last few days, I think.
For me too.
A lot of people, a lot of people like after earnings were like, hang on, this was meant to go to the moon. What the heck happened? So I think it'd be interesting to like dive a little deeper into that and sort of see where it takes us. And we're obviously doing it live. So guys, feel free to hit us with your questions. So where do you want to kick off? Down 81% since all-time highs? Does that make it a good investment?
Not necessarily. Not that in and of itself. No, it does not. I think, how do I share my screen in here? I don't even know. How to do that. Oh, I see it. Let me see here. I'll pull something up here real quick. I think that'll be helpful.
Okay, brilliant. There we go.
Yeah, okay. All right, so this is PayPal. So I'll just talk real quickly about their earnings. They actually went really well outside of forward guidance. They beat transaction margins. I was happy about that. Active customer counts, they've been dropping for a while. Total payment volume went up. Revenue segment went up. Net income was good. Cash flow good. Like everything looked pretty good. And again, these guys have the ability to be able to buy back $10.5 billion in stock. They have authorization for that amount this year. And they said they'd buy at least, I think, 6.5.
What's the market cap? 60 billion or something now?
Yeah, I think right around there. I could pull it up, but yeah, it's right around 60 billion. It's a high market cap, but again, when you're pulling in,
but I mean that's 15% of market cap, right? They buy that back.
Yeah, it's not bad. It's not a horrible number. And again, there's other metrics here too. Just real quickly, the take rate actually went up. That's something that's been bothering me. And number of payment transactions up, transactions per account. The quality of their customer is getting better. And then if you look at like operating leverage, here you could see, I can't expand it. Oh, there we go. You didn't know how to use the screens that I have. You can see how revenue is going up and the operating expenses are staying pretty flat. And this is all before Alex Chris. So I'm really excited about this company and its potential. And I think outside of Alex initially flubbing like a lot of this with presentation, the shock the world thing.
Yeah,
that could have been prefaced a little bit better. That didn't work out. And then it was like a merchant video. It was a great merchant video, and it highlighted all the stuff that they're doing to make the product better. And I think that could very quickly make things better. But it was definitely a flub, and people weren't happy.
Yeah, he should have said, "I'm gonna shock the technical guys at merchants." Yeah, rather than the world. That was
for technical guys. Yeah, no, for sure. Oh,
yeah,
so
it's kind of like.
They're saying echo in my chat. Let me see. Let's fix audio real quick.
Let me see if there's something on my end.
Yeah, I tried turning down on my end.
I've got my echo cancellation on. Is it? Let us know which one of us you hear as echo. If it's both of us, then we can do something about that.
1 sec. I'm just gonna kill that.
That's the fun of being live.
Yeah. What'd you say, Felix? Sorry.
I said here. Okay. Apparently, I'm echoing too. Okay, let me see if I can put on headphones.
Yeah.
I don't hear it, but maybe that'll.
Stereo audio high res. I do have noise cancellation.
We only hear Jesse and echo. Echo stopped. Okay, all right.
You guys
better?
Is it better or worse? I'm echoing. Okay, let me see here.
Okay, some of you guys know. I think let me switch over to a headphone on the output. Audio. There we go. Okay, brilliant. Jesse, can I still hear you?
Yeah, I can hear you. Can you hear me?
Okay, brilliant. Yeah, I can hear you perfectly too. Perfect. Okay. Sometimes my headphones are a bit funky. But okay, cool. I think that's probably better, right?
Let's see. What are people saying? Can you guys hear well now? Is it better?
All good now. Okay. Okay, cool. It
All
might
good.
have been
Okay,
my
awesome.
my speakers. It might be my mic that was picking up the speakers. So
Yeah, this is always
that's
fun, and I'm using a new setup too. So this is it's bound to be something, right? All right,
brilliant.
maybe we start over.
Okay, cool. No, I love what you're saying in terms of like numbers, and I think it's good to dive a little bit deeper. And obviously, guys in the chat, feel free to ask if something doesn't make sense. And sometimes we use
Totally.
acronyms that don't always make sense, and so on. But yeah, I mean, if you look at profit per share, earnings per share was up like 24% last year. That's not horrible, right? That's not horrible. But maybe we can talk a little bit about like expectations and what the new CEO has announced a bunch of things he's going to improve, but I think people were sort of thinking, brilliant, he's going to do that on day two. And
Yeah,
if you
yeah.
run a business with tens of thousands of employees, first of all, you got to figure out who the heck is who and get rid of the people, and they're getting rid of like what, 9-10% of staff.
Yep.
Figure out that out and then improve the product. So I think people's expectations, which I think what we saw from earnings, were like, this is all going to turn around within a quarter. And now he's basically guided and said, I need a year, which is kind of always what I thought. What do you think the chances are of him actually surprising us on that? Do you think that's a low ball, or what do you
Yeah.
reckon, Jesse?
I do think it's a low ball, but I also think you're right. And I don't know if people's expectations are the same as mine. Because I've got options for this. I've got a lot of money in options. This is one of the worst trades I've done in the last year and a half. I bought Leaps. I bought them in June, May or June of last year. And I did that because I made a bunch of money off of Tesla and Meta and Palantir and Bitcoin mining stocks doing that same thing. And I thought, okay, well, let's find some more. Okay, here's Hood, here's SoFi, here's PayPal. These look like they're ready to pop. Fundamentals look good. There's some catalysts in the future that are nice. Let's go ahead and buy it. So already I'm like 8 months too early, which sucks. But I think something similar that you and I have in common is we both like leaps because we don't like theta decay. We don't like time to erode our wealth. And so I'm happy I did a 2-year leap. I wish I had more time um, that left on it. And again, it was for a little less than 2 years when I bought it. But I wish I would have done it later. And I wish I was in 2026 right now. But I'm still sticking around because I think I'm looking for a narrative shift. So
Yeah.
my philosophy is kind of like focusing on macro fundamentals and TA. And then there's a nuance with narrative. And right now, the narrative on PayPal is horrific with it being down, for 1,100 days, essentially from a price of over 300 a share down to 58.26 over 2.5 years later, almost 3 years. So the
Yeah.
narrative is in the garbage can right now, and I'm not
Absolutely.
looking for much. I just want a real simple move. I want it to go. I just want it to go up here to the next trend line. I think I have the right one. Is this PayPal? Yeah, it is. Okay. And so I'm just looking
Sometimes do
for,
that.
yeah, yeah, yeah. So I'm looking for a mean reversion. I need to adjust some of my
Mm.
lines because they're off. So I'm looking for a mean reversion. All I'm looking for is getting to $100. That's all I care
Mm.
about with PayPal.
Okay.
I'm
Yeah.
not looking for 140. People might think that because my strike was 140, but that's just because I was looking for a wicked premium, so I could capture extrinsic value from it. And
So,
so I'm looking for a mean reversion. I'm looking for 66% upside. And if it does that,
which isn't much.
no, it's not. It's not much. And so again, I'm just looking for the narrative to not be garbage
Yeah.
in the
To
next
this kind of
two
turn around.
quarters.
The
That's
way I
it.
always look at it in terms of stocks, I always think like a stock that falls, every 10% a stock falls is like falling out of one story of a building. So if you fall out of the
Sure.
first floor, you're down 10%, you're going to get up, you'll be all right. So this is 8 floors, right? So you are basically in
Yeah.
a coma and most of your bones are broken, and it's going to take you a couple of years to recover. And I think
Sure.
people often underestimate how long it takes. Once the narrative is garbage, as you say, the institutions are out, they're all pissed off, right? The pension funds are pissed off. Loads of fund managers lost money on this, had to justify it to their investors why they did this stupid bet, and that lost them money.
Agreed.
So quite hard to get them back in. And I think there is a lot of animosity towards PayPal management. I don't know. There's
Oh,
a big
totally.
British fund called Fundsmith. I actually have a lot of my money with them, and
Yeah.
and they were one of the biggest PayPal shareholders, and they sold at the end of, I want to say, 2022. which was a smart move, I think around $160. And
Sure.
he actually, in his annual letter, the half of the thing was about how agitated he was about PayPal management, how arrogant they were, how they were doing all these mergers and they weren't giving any numbers. There was no incentive for management to do anything decent. They were just wasting money and they weren't responding to him at all. And he's not a guy who wants a board seat, but he's just like, just give us some data, right? Just tell us answer a question. They just weren't responding. And if that's one of your biggest shareholders, like, yeah, they're just going to leave. And to get them back, you're going to have to do some serious whining and dining and sweet talking and improve your margins, right? So if your business is declining and you're a dick to your major institutional investors, the way the last CEO was, it's going to take time to get those guys back on board. And you need institutional money to move a stock like this. It's just too big. It's $60 billion, right? It's not like you and I are going to move it. So yeah, that's interesting perspective. The whole leap philosophy, right? So we're both options traders, so we have a lot in common on that front. I must say, I almost never buy leap options.
Why not?
I always look at it as like gambling on something really, really far down the road that I have zero control over. I prefer to trade it shorter term throughout the whole thing. So like I had a bearish trade on PayPal. I made money on it yesterday, right? And it gives me that flexibility. I feel I have some visibility a week or two out. I don't know what the heck's going to happen by 2026. But I can see there are exceptions to it when you think something is really not necessarily undervalued, but the likelihood of PayPal screwing this up so badly that they'll still be at $58 in 2 years' time seems relatively low, right?
Sure, yeah. I'm looking for a flip. So yeah, I'm looking for the swing. That's the big thing with me. And you're right, it can take a while. And that could be the case with PayPal. That definitely could. But if we look at like Palantir, Meta, Tesla, all of these that got beat up pretty bad, their charts actually look really similar to this. Even Square, if we pull up Square, the chart looks similar to this. It didn't keep it from jumping 100+% over a short period of time. And again, I look at the list of all the things that these guys have started to do right. And I will not lie, like the narrative for this company in 2021 and 2022, even from like a political standpoint, the woke left narrative was horrific, and it still lingers over the stock right now. When you start freezing people's money because they're protesting in Canada, and then you also threaten to start fining accounts for misinformation on social media. I mean, what is misinformation? I say stuff all the time. Am I going to get fined? Are you guys going to take money from my account? It was just the worst PR that could possibly exist in this stock. But I kind of love that. That's the stuff that I enjoy. I love finding a diamond in the rough where it has been devastated and then look for an opportunity for it to flip, because you're right. The actual growth on this, for it to get back to its highs, it's going to take years, most likely years to get back to the $300 level. If you look at the market cycle chart, like it doesn't happen right away, but like a mean reversion to where this thing's been grinding for the last 2 years, that's very doable. And that's all I look for. And I choose the leaps because I don't have to worry about wicked amounts of theta decay. If I'm way out of the money and it's an unrealistic target, then you'll have more theta decay, just like having a shorter threshold of time. But I love the fact that I have years. And when I look, like for this one, I just use like this basic options calculator, and you can see I put way too much money into this. I put $336,000. That's more than I would put normally. I just kept dragging myself into it. I don't suggest anybody do this. But if I just mean revert to that target, if I get that 66%, if that happened in April after the next earnings call, like let's say the end of April, it's $2.3 million off of 336. If it happens after the earnings in July, it's $1.284 million. And this isn't perfect. It's like, it's a facsimile of what you would get. There's so many other variables with like open interest and volume and all that stuff. But like, these are good numbers still. I would prefer that I have more time, because you're right. After that last conference call, it was not super special. And having more time would be nice for sure.
Yeah. I think though, there is My feeling is that April isn't going to be a great set of data either, because I think it's going to take them longer. But
Possible.
if they can start showing product improvements, and maybe they can start showing some advertising revenue, maybe in the June,
Yeah.
July earnings, and then in,
He said they were
you know,
going to. He said they were going to
September,
have product
October.
deployments. Yeah, he said they were going to have product deployments in 2 weeks to a couple of months in regard to like mobile app and other stuff. It was a real
Yeah,
quick comment, but you're right. I think they need product improvements. The
I
great
think so
thing
too.
is this stock has been in the shitter for over two
Yeah,
years, and that's the big benefit to me right now because we're underneath the volume peak. But man, once we get above that 76 range, it's an easy trip to mean reversion, in my opinion, just to where we get up here near $100. And I could see that happening really quickly with this stock. So again,
but they need to change.
I love. Oh, sorry. Go ahead.
No, no, sorry. I think, there needs to be news from PayPal. I sort of think people are going to get their hopes up that something amazing is going to happen between now and the next couple of weeks or months. And you kind of have to wait and
No.
think, what's the news item that's going to move this, right? So
Yeah, I think
maybe
the not sucking and having any improvement whatsoever. I do agree though. I think like if they could show product enhancements, if they can have a couple of things coming up, like I'm hoping after this next earnings that either A, they're laying off more people, and
yeah,
or we're
sure.
starting to see some changes that are benefiting where they can show any progress, a little bit of progress, and speak to it. And if they don't literally try and tank the call like they did this last time, I mean, the
Mm,
CFO jumped out there and she's like, yeah, we're just horrible with the business and we're all over the place and we don't have any focus and it's a bunch of stuff we got to get rid of. It's like,
mm,
oh, wow, this is great. Oh, and we're not going to grow at all over the next year. It's
yeah.
okay. So
But
like
in
I
a,
love the fact that it's down this low and that they've set that
or
expectation because
yeah,
low
and that's the
expectations are
smart thing to
what I
do
love.
for new management, right? If you're coming in, and if
Totally.
you think about it, the previous earnings call, he wasn't really in charge yet, Alex, right? He just walked in the
Yeah.
building. Everybody was still working for the old guy, basically. So it was kind of like a hey, and that was pretty much it. Whereas if you
Yeah.
come in with a new team, like a politician, you say everything that's gone wrong ever was the last guy's fault, and then you sort of
Totally.
set a very low bar, and then you build it up, and then you sort of improve it. And I think it's smart that they've done that. Obviously, shareholders didn't enjoy it, but it
Yeah.
sets the bar very low, and it
Definitely.
makes me think he's a little bit more strategic, and it makes me hope that he's sandbagging us somewhat. But
Yeah. I hope so too.
the
And if
only
it's
the
not, it's
only
okay.
yeah, the risk I think with it is if you've ever done anything in software, you will realize most things take longer than you'd like them to, and
That's
ultimately
actually
they
my
need
history. Yeah. I get it. I totally do.
a core. So yeah, they need to combine a bunch of apps, a bunch of backends, a bunch of systems that are all like pretty much unchanged since like 1999 or something like that.
Pretty
It's pretty
much.
horrible.
Yeah.
Like
They
I
were
use
great at
PayPal.
buying things.
Yeah, exactly. And then not combining it, right? Not integrating it
Yeah.
at all. And it's just, I mean, the interface is pretty horrible. Like the app is pretty horrible.
Oh,
And
it's my worst complaint. The mobile app, there is like I tried to use that at a store.
what is
When you
that?
compare that to like anything in Asia where you just pop up a barcode and pay, and then you look at the PayPal
Yeah.
mobile app, it is complete trash. The reason I was happy that he actually made a comment about it sucking in the last earnings
Mm,
call because I'm appalled by it. I spent 15 minutes at a grocery store trying to purchase something that said that they could take PayPal and the management couldn't figure it out. I couldn't figure it out. When I opened the
it's
app,
just,
there were like 7 different ways to send money with all
mm,
slightly different descriptions. Nothing was intuitive. You could eliminate 90% of it. From a software standpoint, I used to help develop our mobile app. I didn't develop it, but I helped manage the development of it
okay.
for a previous company. And then I also worked as a manager and an account manager for a software company that worked with urgent care medical systems. So
Mm,
like I've been appalled by this stuff, and I'm
mm,
happy that he's pushing to consolidate Venmo and PayPal apps. That is going to
yeah,
be a nightmare. You're right. But I
totally.
love like some of the other stuff that they were talking about doing, like making the guest checkout process super simple and stupid easy, where somebody could just do it, not have to punch in a bunch of information, have it work across everybody they're working with, where they punch in their email and maybe do some kind of authentication. I love the biometric thing. Like, it's like they're finally doing all these things, and some of these are
But
low hanging fruit.
I mean, everybody's done
And
those like years ago, right? Like every other
I
app
know,
has.
but the great thing is, like, I love the advertising aspect too of
Yeah,
what they're looking
I
to do.
love that.
They're 25% of commerce. And I think with big commerce, they already had them on their, I don't remember, something past pay service, whatever it was. They had them working on it, and their conversion rate was like 70%. And that's a
Mm,
awesome rate. And they have all this data, 25% of e-commerce, like, that's a huge data warehouse. That is wealth. That is like the
yeah,
Meta, Amazon,
mm,
YouTube way of making money. You
absolutely.
help connect people through the data. And if somebody wants to buy something, you should push them to merchants that are on the platform, all this stuff. And you should use it for advertising. They can make tons of money off of this. And I love the fact that he said that they had already consolidated a bunch of data silos, like into one unified warehouse. That in and of itself, in the short period of time he's been there, got me excited too. There's just a lot of little things I think that these guys can
Mm.
do. But to be clear, like, that trade of mine could go to zero. Again, this is the worst trade I've done in a year and a half. I could just say goodbye to $330,000. That is a distinct possibility. I hope it doesn't happen. I would prefer to make, 2 million plus off of it and not lose three
Yeah,
hundred
I
thousand
hope you
dollars.
do.
Yeah, but it's possible though, and I'm going into it knowing that. So anybody who's doing this too should
Mm,
realize that this is an asymmetric bet, one of many,
yeah,
and
yeah.
I am willing to lose it all. I know I've watched a bunch of your videos, Felix. You're more conservative than I am. You're doing a stock portfolio and then you have trading. I am not that way. I am pretty crazy. Probably creates more stress than I need in my life. I like asymmetric bets that are 10 baggers. And that's how I
Mm.
made 700% in the last year. And I've got a pretty good track record over the last 5. But again, it comes with risk too. I made 700%. Now I'm probably like down 29 this year. So
Yeah.
that's kind of the
No,
nature of
that's
the
it.
beast,
It's a
you
no.
know?
I totally understand the philosophy, and obviously, like a
Yeah.
lot of my guys do the same thing. I just think it's one of the reasons I do it the way I do it is my mindset doesn't love a lot of up and down, and I think for to do the
I get
asymmetric
that.
thing, which is basically where you're putting in 100K and you're hoping to make a million or two or something like that,
Yep.
is it's very hard on the mindset, right? Because you will lose the majority of those trades, and then when you do make money, you make a lot of money. It's very, very hard to do for most people, especially when they're new at trading. So I generally teach people to do the high probability trade instead. Have a 70, 80% chance of making money. You'll make a little bit of money, but you'll make a little bit of money pretty much every other day. And that's a lot softer on the mindset. And
Sure.
then
Yep.
some people want to then, once they really master that and they've got their rules and their structure and they really understand what the heck they're doing, then I think it might be a good idea if you're so programmed in your brain to maybe go for the asymmetric route. But no, I totally get it. I mean,
Yeah. I
that's
don't think
how.
99% of people should do what I do. I
No,
definitely don't.
probably not.
Yeah.
Probably not. They will just lose their house and home. But you're doing it with a smile, which means you're able to handle it, which is the difference. So there is never one right or wrong way, I think, of trading or investing,
Agreed.
but it has to work
Yeah.
for you. And I think that's one of the things people need to figure out when they start to trade. Is like, what if you're waking up in the middle of the night and you're worried about your trade, or you're checking your screen every 50 seconds, then it's not the right
You're in
strategy for
trouble.
you, right?
I used to be that
So
way, so I understand that too.
yeah, exactly. And that's where we all start off. And now, like, I'm super chilled with my trades because I know, like, yesterday the morning, the market went down, whatever, and I was like, brilliant. I can think of 4 bearish trades I've got open. They're all gonna make me money today, and I'll ignore all the rest till
Yeah, that's a
till
good
this
idea.
bounces up again.
I've
And
got
that's
hedges, but mine are like the world's falling apart hedges. I
okay.
don't use them for like money. I don't use them to make money. I'm hoping just to burn them off, but I
Yeah.
totally get that. That's a smart way of doing it too.
So it kind of gets you to a similar outcome. It just gets you there a little bit differently. Like we were talking about at the beginning before we went live. Like I was saying, I actually made money on PayPal yesterday because I had a bearish trade on,
Yep.
which means I made money if it went down. And for me, that was just the chart, like that big candle dropping um,
Yeah.
4 days ago or something. I was like, well, that kind of makes sense. And all I needed was one more down day at some point in the next sort of 5 to 10 days, and I'd make some money, and I did, so I'm out. But yeah, maybe let's circle back to the
Yeah.
advertising thing. For me, honestly, that's the most exciting thing they're announced. If you look at Amazon, I think bring in 80 billion in advertising revenue a quarter, something like that, which is
It's
more than
amazing.
YouTube, right? Which is more than YouTube.
Yeah.
And it's a total side business for them. And it's huge, and it's just data. If you've got people who spend time on your website or your app and you're not showing them ads, what the hell, right?
Yeah. Yeah.
And they don't just know what you visit on search, they know what you bought. So
Yeah. Meta's the same way.
think of
Everything.
all the
Yep.
complementary things you can do, right? You're buying a phone. Well, show them the phone cover and the accessories and the AirPods and whatever, right? Like you
Yep.
know what they're doing. Plus, you know a lot about like their income, and they basically know everything about us, right? They know how we're paying it. They know the credit cards we have. They know our addresses. Like they really, really know the customer. So it's insane that they haven't used that. The question is,
No,
how
totally.
long is it going to take them? Like they should ring up Palantir and get their data silos sorted out. I think that might be a good
Yeah,
idea.
honestly, that wouldn't be a bad idea. I do though. I look at and I posted something like this about Intuit, and because Alex Chris comes from there, and he was there for like 19 years, and showing the stock price since he was there, and it was like 3,400% overnight. It's one of the most beautiful charts you'd ever seen.
Hmm.
So like, and he helped with a large part of like product enhancements and just trying to refine the product. And so I think if anybody could do it, I think it's him. But again, this could totally fail. This has been my worst trade. I'm ready for it to fail. It'll be a bummer because I made like 600,000 off of Palantir. So if I lose half of it on PayPal, I'll be bummed out. But I still think genuinely that this one can still play out and that I can make a bunch of money off it if it hits 75 to 100.
Yeah.
And I think it can mean revert to 100. And if I get that 66% upside between now and July, gives me like 2 earnings reads for Q1 and
Hmm.
Q2 that I can make a bunch of
It,
money.
it,
But if I was
it could
somebody
go to
new going into
100 by
this,
the mid-year. I think it's a possibility, on the 90s or
yeah. But if
something,
I
in
was
which
new
case you're
going
making
into it,
money.
I would be in 2026
Yeah.
personally.
I
I
think
would get myself
probably
worked.
if you want to do this kind of like long out trade, buy a leap, yeah, I'd go out probably to 2026, because
Yeah.
your risk then is that they will not deliver at all on anything. I mean,
Yep.
literally, because if you look at the valuation, right, I always look at like, okay, people look at PE number, price earnings multiples, which is a terrible thing to look at generally, but it's like at 11 right now, which just seems fairly cheap. But the only thing
Yeah.
I actually look at is like, how is that changing over time? And if you fast forward 10 years, it'll be
Is
like
it
a
still going to be
3x multiple or something like that, based
sure?
on
Yeah.
what, 10% growth a year, which is nothing, right? On earnings, it's basically just
Yep.
sacking a couple of people. So it's almost like it's such a value play. It's almost hard to imagine that they can screw it up that badly over that time horizon. So yeah, I
And with
think
that much cash and authorization
I
to buy
know.
back.
And the buybacks. I mean, if you're buying back
Yep.
15% of your or say 7% or something like that of your stock a year, how is that stock not going to go up? And your profits are going up. What was it this year? 24%, I think, something like that. How are you not going to see some improvement in share price? It's kind of hard to fathom. I mean, people have to really just give up hope and just say you are the worst company in the world with the worst management. So
Yeah, and it's in
yeah, I
a
think
sector that it's expanding too. Like I actually believe that fintech will help absorb traditional banking that isn't moving quickly. Legacy
mm,
bankers with physical infrastructure that aren't like these Asian places where everything is on an app. Like it doesn't make sense anymore. So like companies like here in the States, like SoFi and PayPal that are
yeah,
digital platforms that have just been, this one's been dying for a decade. They have the ability to transform themselves in a market that is growing, and they
mm,
have 10.5 billion in buybacks they could do. That alone would give them a decent amount of growth. Fire another 90% and then consolidate one portion of the app. Figure out where you can lose the least amount of revenue, but wipe out a ton of operating expense and complexity and make it to where they talked about how they want it. They're trying to increase engineering velocity. And I love that that's his focus because you got to get rid of all the crap. focus on what
Mm.
makes you money, and then be able to engineer in a way, have like a complete view of your data set, and then engineer and develop products. I love the fact that he's even got a vision on his new product line right now, and it's pretty
Mm.
clear and concise. Like I don't know. This is a trade that I'm still excited about. Not as excited as I was 8 months ago, but
Sorry about
in
that.
some
Sorry
ways.
about the.
In other ways,
Sorry
I'm
about
more
the
excited.
earnings. When you
But
talk about engineering, what are your thoughts on?
yeah.
Because I know you're majorly into the crypto space, and what's your thought on PayPal's stablecoin?
I like it, and it's growing, and I don't know what they're doing with it. This would be another thing that I'd love to hear in the next conference call.
Yeah,
I'd love to know, what are you guys
what's the
doing with
so to someone who
stablecoin?
doesn't know what the heck that is, what's the
Yeah,
value proposition of PayPal stablecoin? Like why do we need that
it's a
versus?
dollar. It's a digital dollar, and so but it can be transferred at a fraction of the cost is what it takes to go through the traditional banking system. If anybody's sent like money, especially internationally, really helpful for international trade. If you've tried to wire funds across, like, let's say from the United States to Africa, there's about a billion people with their hands in that pot, and maybe you'll get 60% of the money there. But even to a lesser degree, if you're getting charged like 2, 3, like credit cards, 2 to 3%, or cross-border trades where it's like 5% or even more, double digits, that is so much money and expense. And with stable coins and blockchain, you don't have that. The overhead is way lower. You could still be in compliance, and you can move money really quick and fast. And that's the benefit for them, especially in cross-border
Mm,
trade. They can use and they can use this to where they can back it with treasuries, and they can make it to where they're earning yield and they're giving yield back to people. And there's a ton of cool stuff they could do, similar to some of the stuff that Robinhood's getting ready to do right now with gold membership. And I think that they could do some of that here with the stable coin, and I think it would be brilliant. I mean, Tether, I don't know what they made last quarter, but like they've got an 80 billion or something dollar stable coin. If PayPal becomes like the fourth highest one, and the other ones underneath of that are trash, and I think they could do that this cycle and like the next year and a half. That in and of itself would help them with revenues, and again, just with expanding their products and doing things for cheaper. I think, especially with something like PayPal, if they could do more QR based, not just online, not just easy like biometric, like I just paid for something real quickly with my thumb and I didn't have to go through all the BS. But if they could do that in the store too, they could
mm,
start to get it to where they can get to a point where credit card machines go away and they become the future, or at least
yeah.
one of the companies that's the future. And so I think this sector is really exciting. I think that these guys can do a lot of great stuff in it. They've got a horrible past, and I'm hoping Alex is the future. And I've got mixed results so far. He shocked the world definitely, but I think
Yeah,
that
he
they set
shocked the
the
world with a really
expectation.
boring presentation. So yeah, when
Boring,
you're
yeah,
talking
yeah,
about the in-store checkouts, I mean,
yeah.
there was an interview out in a couple of years back when Elon was spending some time in China visiting his factory there, and one of the things he was saying is like they've got this great app here. It's called WeChat, and you can do
Yeah,
everything
yeah.
with it. You can pay with it. You can make calls with it. It's like everything in one app. And then he buys Twitter, and he's now turning Twitter basically into
Oh, he's
WeChat,
totally
right?
making. Yeah, yeah.
And which is ironic because an American company knocking off innovation,
Chinese. Yeah,
uh,
yeah.
but I suppose some people are saying, okay, but that's going to kill PayPal, or Apple's Pay is going to kill PayPal, and I think from my point of view, okay, the core business at the moment is online merchants, and they are the
Sure.
largest market share, and that isn't really dwindling very much. So quite hard to actually
No,
get at that. But yeah, the in-store checkout thing is going to get more competitive, and I think down the road there will be probably two people doing it, a bit like Visa, Mastercard. And the
sure.
question
Yeah.
is PayPal going to be one of those? I mean, I think if they could be, that'd be amazing. Don't know if that's likely.
Yeah, I think they can be. I think they can be, and at least from the like the buy now pay later portion of things,
Mm,
they're actually doing quite well. Yeah, that's better. So like when you look at other competitors, they're like at the top of the list. And again, for like online purchases, they're at the top of the list. These guys are the
yeah,
big dogs. They're way above everybody else, and it's really just a matter of product refinement now, and not pissing off 40% of your customers by making political statements that aren't needed from a company that
exactly.
should just be focused on product. But I think if they could do that stuff, Like these guys can crush it. They can crush it in the future. And so this will probably be a bet. Even if I don't win on this one, I'll probably, even if I lose 60, 70%, maybe 80, 90, whatever, I'll probably still stack out
You'd probably do
longer
it
into the
again.
future, as long as I see the right moves from them.
Yeah.
As long as I
Yeah,
see
I
them
totally
doing
get
the
that.
right stuff.
I mean, the whole buy now, pay later, I think it's sort of ethically probably one of the worst things to do in the world because
Yeah,
it's
it's
kind of
hard to
like
know.
you're maxed
Yeah.
out on your consumer debt and your credit cards, and now you can do buy now, pay later on top of it.
Yeah,
And you know,
I thought that too, but some of it though is better than credit cards. And credit cards suck if they're like, a lot of people mismanage them and they go to the
absolutely,
default rate and
it's
they
like
just indebt
60% of
themselves
people do, yeah,
anyway.
which is shocking.
Yeah, it's definitely, so this is like another version of that. From what I've seen, the rates are a little bit better. I never use it. But people do, and it's becoming more popular. I'm not sure why people like being so indebted, but they do.
Don't know
But I
why
do
either.
think that I think that this could be, if the economy takes a massive shit, this could be a negative for PayPal, having a bunch of loans that hopefully are good.
Well, but
And
they're selling them off, right? They're selling them to
yeah,
private
I think they
equity,
do that with a lot. Yeah. I think the churn is pretty high, which is good. That's definitely
which is
something you want.
which is very good. So you basically you bring it in and you sell it off, you make a profit, but the risk is no longer yours. You pass it on to some credit shark
Sounds
somewhere
like the
else.
2008 mortgage collapse, but yeah,
And then exactly, they repackage it and they make all these
it's
crappy
good.
loans look golden and sell it off to somebody else who doesn't know
Yeah,
what it is, probably a regional bank. Yeah, that's probably what's going to happen down the road. But no,
very
I
much.
agree with you. I think it's a big thing, and people just, I think we've been taught to have this sort of instant gratification so much that people just want to buy stuff now, right? Apple brings out a $3,000 headset. People want to buy it, even though that's what they make a month. They're just going to freaking buy it on BNPL,
Yeah, it's
and
insane. Yeah.
it's insane. But it's just, if you're PayPal, well, that's the drug you push, right? So you know you're going to make money on that. So I think it's a brilliant business move. I'd love to see them roll that out internationally as well, because it's just US based at the moment, and I think there is something up for grab there. I don't know if whether that's a regulatory thing or something why they're not doing it, but yeah, I think there's a lot of opportunity. I totally agree with you, and it's tiny, right? At the moment, in terms of revenue for PayPal, it's like non-existent
Yep.
BNPL, but that's gonna
Yep.
really really grow for sure.
There's just all these levers, all these little levers, and if they can just find any direction at all,
Find
again, I
one
think
that
the narrative
works.
can shift. Yeah. But I think they're capable of it. We'll see what happens. I'm hopeful, but
Mm.
one of many plays.
Totally. Someone's just saying in Lost in BKK saying in Europe they sold them to KKR, which is one of the big private equity sharks out there. Yeah, they sold all those.
Okay.
I think they also sold future BNPL numbers. It's like a deal. They basically just take them off
Oh,
you
okay.
off
Like they sell them a
PayPal's.
batch 6 months out or
Yeah,
something.
yeah.
Ah,
So they say
interesting.
here's 500 million, and I think the next 4 billion you'll also get at like a fixed. Obviously, there must be some limit on credit
Sure.
ratings and that kind of thing, but it just means it goes off balance sheet, and the risk is no longer PayPal's. And I think that's the smart thing to do, because PayPal is good at bringing it in. They're not necessarily the greatest at collecting the money or any of that. So
And
just
who wants the
sell it.
liability? Yeah, no, for
Exactly.
sure.
And yeah,
Great.
you know, what if the economy does go to shit? Then who wants to deal with that? So you'd
Yeah,
rather some private equity shark, who undoubtedly do also sell it on, to
yeah.
somebody else. So that's a smart thing to do, and I think that's what we see with everybody, right? Like SoFi's loan book, and everybody who basically brings in money tends to sell it on. It's sort of like the insurance version of the loan book thing.
Yeah. Definitely got something from the housing sector, I'm sure.
Yeah, I know. In the problem with that is just like, if your rating agencies are corrupt, right? That's the problem. Like that was 2008,
Yeah.
wasn't it? They were just
Moody's.
like,
Yeah.
here are 1,000 really crummy loans, and by putting 1,000 crummy loans together, we'll make them AAA. And you're like,
Yeah. That
how
was the
does that
game.
how does that come? Really? Does that make it? You know, because the original idea was you put some great ones, some good ones, some decent ones, some crappy ones, and
Yeah.
you put them together, and that way you got an average rating, and then it's less horrible than if you just have the crap. But they just bundled crap and somehow convinced the
Yeah.
world that
It was
was gonna be.
diversified shit, and that's what makes it better. That's what gave it
Yeah, but
AAA.
it's
It
still all
diversified your
shit.
risk.
100%.
Yeah.
So
Yeah.
no, that was insane. So hopefully we're not seeing that again on this one.
No, not here in the States. I don't know about every country, but adjustable rate mortgages, and that kind of stuff just doesn't exist. There isn't the fever with the housing. So we're pretty safe here. But yeah, and I think the economy here is strong. And I think that, the
Yeah.
CPI data
Okay.
was a little shocking. It was higher than I thought it was going to be. I don't know how accurate it is. There's a bunch of stuff talking about seasonality, and then shelter
Mm,
was 2/3 of it.
yeah.
And I think that number is going to come down. But there's this tax and insurance that's went up a lot over the last year, and that's probably adding to it. And then illegal immigration and trying to house people. There's just a lot of
Mm,
crap going on. But the thing with the CPI and the shelter component that I think that's being misjudged right now is it's constrictive towards monetary policy right now, in my opinion, because again, if insurance and taxes and things are driving up prices, that's pulling away from consumer spending and making it
yeah.
unaffordable for them. So you're already looking at a tightening mechanism.
It's
That
true.
shouldn't be like, oh, hey, because it's high and mostly shelter, we should actually keep rates high because we don't want to make them low because that's inflation. It's like, that's a stupid idea because
Because
this
you've
is
just
already
reduced
constrictive.
disposable income, right? You've just like
Yeah.
you got to pay your rent, otherwise,
Yeah.
you're
And
living
if
on the
that's the
street.
inflation part, if the inflation part is constrictive and lowering spending, that's not really much of an inflation. So my thesis is still that we should be lowering soon. And we'll see what happens.
Mm.
But yeah,
Yeah,
hopefully all these
I
things
kind of think the
happen.
inflation data was a load of nonsense. There is a great website called trueflation.com
I
or
love
something
it.
like
It's
that.
the only thing I listen
And
to. It's how I made all my
and
money last year.
did you? Okay. And it shows
Yep.
inflation is what, like 2% or something. It's just,
Yeah.
and it was like 11%. So it was way higher than the government ever admitted,
Yep.
and now it's way
Exactly.
lower. So it's kind of like problem is kind of taken care of, but I think the Fed. I always thought the Fed would be too conservative and will sit on their hands for too long, because they're sort of haunted by the ghosts of the 1970s, and
Yeah. Maybe.
when they basically brought inflation down and then caused it again like three times in a row, and it was a total
Yeah.
disaster.
Yeah.
And they don't want to do that again, but they just like always too late, and then they do too much, and I think that's probably hard not to do because what they do has an impact like a year and a half later.
Sure.
But we haven't felt the impact of the rate hikes yet. I would say like probably half of them we haven't
Oh,
really
it's
felt
still
them yet.
rolling. Yeah. Yeah. That's the important part. That's what he should be thinking about.
So you should be
We haven't
thinking
felt them
like
all yet.
investment is gonna freaking collapse if I leave it at this
Could.
level.
Yeah.
And instead he's like tinkering around. And I
I think
mean
he's going to
jobs.
change though. I've got
You
this
think?
thesis on Powell because again, he was also the inflation is transitory person. So he could tell you all kinds of stuff, right?
Yeah.
But then a couple of months later, we go from inflation is transitory to, oh, by the way, I'm going to hike at the most aggressive rate in history. So
Hmm.
I think he has the
Well,
power
he's also the
to
guy who
say
printed $4
one
trillion
thing.
of money, which no one had ever done
Yeah,
before.
yeah, yeah. And the Treasury
He's a,
too. Yeah, they and Congress, everybody spent a lot of money. That was easy. But I do think that he's very willing on a dime to switch things around. And there's still stealth liquidity going on. Like our treasury, the bond issuance, we used to issue a bunch of coupons. It was like 80-20 coupons. And now it's like 70-30 bonds, long-term dated bonds. So they're doing things in like the reverse repo and the bank term funding program,
hmm,
which is about to expire in March. But they're doing things where they're still allowing liquidity to be able to be pushed out, even though they're
yeah,
tightening, even though rates are restrictive. And so I think that they're talking the talk. And then I think in a heartbeat, maybe by
doing
like
the opposite.
May, June, I think they're going to start to flip. And I
Hmm,
think that could be stimulative because here in the States, our housing market is devastated. It's at the it's at the lowest levels in like 20, 30 years. And so we just haven't been selling, and all that's looking to happen to reignite a huge engine in our economy, whether it be the auto sector, whether it be real estate, is just lowering rates, just releasing
yeah,
the valve. And so, and we've already seen that in refinancing, mortgage refis here in the States. So if it's already getting better. It's way smaller than it should be, but it's better. And so if they release this valve, I feel like the stimulative portion of that could push us higher
hmm,
before we have any major economic downturns. I feel like we could actually go higher. I don't know how much higher, but I feel like we could go higher. I just don't see there's just because we printed almost 40% of the entire money supply
I
in
know,
just the
just
last
the
4
most
years.
insane thing ever. And then pointed the
It,
finger at other countries and said, they caused the inflation. And you're like,
yeah,
really?
yeah. We'll blame it on everybody
Nothing to
else.
do,
But we
nothing to
literally,
do with adding 40% extra dollars. And yeah, it's
yeah,
insane.
we printed money at such an aggressive rate and then tightened
Mm,
so much. It's just insane when you look at 40% of the money being created after 2020, and then
yeah.
the couple hundred years before that, a little bit less from when they're counting, and it's mind boggling. And then you look at the bond market had the worst route since the 1700s. It's
Like
just
tulip season.
it's, it's a crazy time, but I actually think we could have a melt up. I think we're nothing
Mm,
like the 70s, and I think once they release that valve, we could actually go higher. I could totally be wrong, and I wouldn't. That's why I
yeah.
have
I
the
mean,
world is ending hedges.
I think I always look at it like follow the money, like who's making money out of this, right? So
Yeah,
the all the money printing, that 40% extra dollars there is it drove asset prices up, right? It gave us the stock bubble and the housing bubble and like everything has gone up.
yeah,
So who made money? Well, the people who owned all the assets. So the top 1% got very much wealthier and screw everybody on salaries. And
yep.
then we raised interest rates a bit, but in reality the big companies benefited from it because they actually have cash and they can finance
Oh yeah,
themselves very cheaply
all
on
the
the
big
market.
boys. Yep.
And all the small caps are, that's why IWM, the Russell was down like 3.5% at the open yesterday because all those
Yeah.
unprofitable small companies are like on the brink and they're going to go to the bank and pay 7, 8, 9, 10%, right? And then now they're going to lower rates. And I think you're right. I think they have to. And it might be May or June or maybe even July. But then they're going to have to do it quite aggressively because look at commercial real estate, right?
Yep.
That's a total basket case. And
Yeah.
that's almost $1 trillion that has to refinance this year at market rates. And
Agreed. Yep.
the Fed knows, and they keep saying it, that they will basically all go bankrupt. I mean, not all, but maybe 30% of them, unless rates come down. So they're going to have to do that. And then again, you kind of think, well, who does that benefit? Well, of course, it's the guys who are asset rich, right? It's Wall Street because they will be
Yep.
able to refinance lower. They'll be able to buy the distressed property from the smaller guys, and it's going to be
Yep.
it's going to be great for business. So I kind of think the
Super
whole
big.
thing is just run for essentially Wall Street and the few percent of people that actually have all the asset, maybe the 0.1%, and that's just what the cycle is. And because they pay your politicians, and it's the same everywhere in the world, and so the system
Well,
keeps working for that.
I totally agree with everything you just said. And also in the banking sector here, we've had this concern about regional banks and potential collapse. Well,
Mm,
I mean, after SVB, they basically said, hey, we'll insure depositors. There's no bank collapses anymore that we care about.
yeah.
Well, I don't think they give a shit about banks. And I listened to a former banker, I think it was from Truist. He's a brilliant guy. He was basically saying, yeah, they want to consolidate banks. They like maybe you have
Yeah.
20, 30 regionally, but you shouldn't have 100, especially like in
Mm.
smaller states or more. And so they're okay with letting them die and then be bought up by the JP Morgans of the world. I think that's
I mean
inevitable.
that
Great
that
Depression.
JP Morgan
JP
deal, right?
Morgan
Like, okay,
became,
the
yeah,
only good regional bank who got it, JP Morgan, and they got it basically for
exactly.
free. The government underwrote all the risk,
They got
and
all the things they wanted. The government took all the risk, 100%. And
exactly, and
that'll
next
happen.
quarter JP Morgan goes, oh, we have an adjustment in the value of that bank. I don't know what it was, 10 billion extra or something, and bonus season. So yeah,
Yeah,
it's
earnings.
just rigged that way, and it's just I agree with you.
Yeah.
I think the more they squeeze out the small banks, the more the big three, four, five benefit, and I think you'll see that again. I mean, 11th of March, this bailout runs out, right? There'll be another one. They'll call it something different, the
Yep.
Make America Safe Again Act or something stupid,
Sure.
and but yeah, they'll bail it out, and they'll probably let the small ones not fail but get gobbled up, like you say, so that J.P. Morgan, you know, makes some more money.
Well,
That's it.
and I'll say this too. It's not just to save like commercial real estate. It's to save the government. They can't they can't sustainably manage issuance of long-term, like they could do long-term debt. They can't do coupons
Mm,
over short periods of time, but they could push out long-term debt that's like 4 or 5% bonds. They could do that, right? But they can't have that be a number with the amount of debt that we have for a long period of time before debt becomes the main thing we're paying each year.
mm.
So they have to have rates come down to a more sustainable level and have rates, bond issuance rates that are more sustainable and that aren't expanding at a parabolic rate like we've been doing between all the money printing and the bond issuance. The bond issuance is probably going to pick up. I was looking at bonds for a while, but I'm like, why should I get into bonds? This is what they're issuing. They're issuing a bunch more of this.
What,
Like,
2
why would I buy
trillion this
bonds
year
right
or
now?
something crazy? Yeah, exactly.
Yeah, and it looks great on paper when you're like, hey, they've had the bonds have been in a route that's the worst since the 1700s. But it's like, okay, but if they're printing a bunch more, then this could stay this way for a while. It could make PayPal's return look a lot quicker.
Totally.
Than
I think
what
I
the
kind of
bond
feel
market's
the bond trade was over. Like I got out of it, I think in October, November or something.
Yeah,
And
me
that
too.
worked very well. Those were nice trades, made like, I don't know, 20% or something in relatively short period of time. A very, very safe trade in a sense. But yeah, it's a bet on rates coming down faster than people think. And I think at the moment that doesn't seem to really be the smart thing to do. But yeah, I think you're touching on a really good point there. It's like, debt interest will be what, trillion and a half this year or something. That's
a ton of money.
more
It's
than the
just a
defense
crazy
budget, which is an insane
Yeah.
number. So how do you deal with that? You deal with that by A, having lower interest rates, and B, having
Yep.
inflation. The one thing that kills
government
debt
inflation,
is inflation.
money printing. Yeah, it can't
So
be the bad inflation.
Because it'll be worth less as a proportion of the economy, because the economy will
Yep,
inflate,
yep.
it will get bigger, right? So that's how
Then you
governments
don't care
always
about your
deal
debt.
with debt. And
Yeah, but it's important. Where the inflation comes from is what they care about. And that's why I think they're being a little extra cruel to markets right now, because they don't want it to be inflation that's caused through like speculative demand and commodity prices going exponential and wage inflation that's through the roof. They can't have that be the inflation. It's got to be the money printer, because that's what benefits them. So that's where the
exactly.
inflation needs to come from. And so I think they're trying to ensure that they're the inflator. And I think they'll be successful at it. And I think but that is a reason why like Bitcoin and stocks and real estate potentially can continue to go up in value, because the world is on an unsustainable path of monetary policy. And I
sound
think
like
the
Jerome
US is
Powell
one
there.
of the cleanest shirts in the dirty laundry, but it's still a really dirty laundry.
It is, but I think people get put off sometimes by all the shenanigans around politics, and I still think like there's a lot of money to be made. And if you're not in it, if you're sitting on the sidelines waiting and hoping for some like perfect moment to appear, it's never going to happen. So I just think you just need to be in the market, and it doesn't matter really if it goes up or down. Like there's always an opportunity, right? But yeah, I think the whole debt thing is an interesting one. No politician is going to come out and say, I'm going to raise your taxes and I'm going to cut your services. It's never going to happen.
No, that's not
So
popular.
It's not, exactly. It's the democracy is not set up that way, right? Because you'd have to be like, make a decision that's going to get you not elected. Like democracy is based on popularity, and therefore it's going to be like, here is free stuff. Here are less taxes. And they're going to continue to do that. So I think we'll all end up in Japan, which basically means the central bank will own the majority of all debt and all assets. And you live in this weird,
it's happening.
Weird
And it's
world.
worked. It worked for them. It wasn't supposed to work for Japan at all. Japan's actually doing fairly well right now. But I do think that, and this is kind of like a negative tone talking about all this stuff about like inflation and the government being, and like, again, all governments around the world are corrupt and love the money
This is
printer.
the conspiracy part of this live stream.
Yeah. So like that's everywhere. But I do think
is.
that there's things that are happening now. I believe we're in an exponential age of abundance. I think energy around the world will be dropping to levels, because again, we get all the energy we need from the sun right now. And then we have nuclear and we have other forms that we can tap into. And that's happening more aggressively around the world. I think energy, especially with like battery systems, can drop to levels that are a fraction of what it is today. I think that AI and autonomy and robotics are moving at fast paces. I think genomics is doing crazy stuff. And so I think that there's this bad stuff of the old guard that collapsed the Roman Empire, expansion and just printing tons of money, and like every other civilization in history, or a lot of them. But I do think that maybe we can outpace some of that with all the innovation, because again, like Elon was talking about a while ago with, Optimus, like once you can print GDP through robotics
Yeah.
and have these things working in factories and other jobs, the concept of economies and what it changes, it flips on its head. And I think there's a lot of Bitcoiners are like, oh, you can't have, you can't have money printing and inflation. And I get that argument, but there's something called money velocity where you want money to exchange hands, because each time it exchanges hands, it's not like a zero sum game. It enriches people. The employee gets paid. The employee goes out and spends money. That business does better. That business has more money. They hire more employees. They can give, they're making more for their shares, whatever. But it's like it can be a revolving door of wealth creation. So money velocity has a purpose in my mind, and I think this is what some Bitcoiners don't get. But at the same time, I think that you can have in the future this money velocity creation still, like we've been doing the Keynesian economics thing. But at the same time, you could have a store of value like Bitcoin, where and technology and advancing at such a fast rate that it makes the world a better place, and it makes
I
these
like,
things sustainable and they can coexist for a while. And
I
so
like,
I
I
don't.
like the hopeful
I'm an
note. Yeah.
optimist.
But I think I'm with you on the robotic side and the AI side. I think it's the
Yeah,
next steam engine, as in it's just going to make
for sure.
us like 1,000 times more productive. And it's going to cause the same problems the steam engine caused, which was like all the farm laborers were suddenly unemployed. That's going to happen, and I think people don't realize that yet. If you work in a job where you do something fairly repetitive, your job is going to disappear. You better go and learn something else, and that's why you're seeing just the beginning of it. All the big companies laying off tens of thousands of employees. There is
Oh, there'll
so
be
much
more.
stuff you can automate. They're going to be able
Yeah,
to like
there'll be
sack a
more.
heck of a lot of people because it is just phenomenal what you can do with it, and it's just at the outset. My feeling is that the government is going to come in with this sort of, basically pay you a salary. I think
They have
that's
to.
where I think it's going,
Yeah.
because they don't want the unrest, and that's going to bring. So you're going to get this, whatever you want to call it, and I think socially that will not necessarily be a good thing. Most people think, wouldn't it be glorious if I could be at home and get paid some amount of money? But
Yeah,
you
yeah.
have no sense of satisfaction and achievement, and you just kind of are sitting there and you're going to drink beer. So I think that's going to be a huge problem, and it's going to split society way more into those who are actively doing stuff and using the technology to build something brilliant, which is what I would encourage everybody to
Yeah.
do and learn. And then the masses who will just sit on a sofa and kind of wither and take pharmaceuticals and make
Yeah, I hope it doesn't
shareholders
turn
money.
out that way. That is a distinct possibility. I hope my wife loves Star Trek, and so I'm hoping more for the Star Trek version of the future where
Okay.
everybody gets their stuff out of a replicator, but people still want to find purpose. And I can relate. Even when I retired a few years ago, like initially the concept of retirement was super exciting to me, and my
Mm,
dream had come true. And then I realized everybody else around me is not retired. And so I can't just call up my friends and be like, "Hey, you want to hang out?" And then they're doing stuff, and then they're busy all the time. And then I
yeah.
started to go like, huh. And I've watched every show I wanted to watch. I played some video games. I did all this stuff. And now I need to do something. And so like I get
Is
that.
that is
Like,
that is
and but
that
I
why you're
think
on
that
Twitter and you just started your YouTube
yeah,
channel and stuff?
yeah, it's funny, but it is. It totally is. I started off in Facebook groups, but then they just censored the shit out of me. So I stopped
Mm,
doing that, and then I moved to X. And then last year, I had like in February or something, I had a couple hundred followers, and then it turned into what it is today. But that's what I literally I wanted to figure out. Like, it's like, okay, I'm doing all this research. Maybe I should start talking to people and conveying it and trying to provide some kind of value to the people around me that I love and just in society. And I think that there's going to be a decent amount of people that get bored and just do something
yeah.
to do something. There's going to be some of them that are like hedonistic and go into orgies and or sitting around in front of the couch and just like 1,000 pounds. That can happen too. But I think that it could be positive as well, and that there
Mm.
could be an
I, I,
environment
I,
that's
I
hopefully
very
more
much hope
productive.
so. I very much hope so. For me, it's the same thing. Like I struggle doing
Yeah.
nothing. I know that, which is one of the things reasons I do this. And I also realize that I need a sense of achievement and some sort of dopamine hit, and
Yeah.
and I get
Same here.
that by doing this and by teaching people and seeing I wake up in the mornings and I've got like 35 emails of people saying, "Hey, this is amazing. I just did this incredible, and it made this money and stuff." And
Awesome.
for me, that's very, very rewarding from a selfish point of view. But it's also just obviously super nice to see people do well if you can have a positive impact. And yeah, the whole sitting on the beach thing, I think it wears off for me after about week 3. I did 6 weeks of
Yeah.
nothing, and when I kind of gave up the day job. And man, I was frustrated at the end of that 6 weeks. I
Oh
was
yeah.
like,
It
this
doesn't
is
take
this.
long.
No, like I've done all the
Yeah.
things. I mean, what do I do now? And as you say, like people around you tend to be busy. I actually have quite a lot of friends now who are sort of semi-retired or early retired, or
Cool.
and so we can do stuff during the week. Like we're gonna go for a hike tomorrow, and that kind of stuff. But it's you need a purpose in life. And I think
Yep.
maybe that isn't people's job. If your job's boring and sucks, you still need to find that purpose. But just replacing the job with doing nothing isn't going to get you to satisfaction. So, you need to find
No.
something that you actually think like this is cool. And it could be anything, any hobby, anything. But I think if you can give value to people and do something social, and I think we all are sort of social beasts, then that's a really fun thing to do. And this is why I think social media is such a cool thing. Like the people, we've
It's
got
so awesome. The fact that I'm
400
even
people here
talking to
watching
you.
this live, which is super cool. And
Yeah.
we met on X, and I saw your content, and I thought, hey, you know what you're talking about. I like your sense of humor. And I love that you post when you're losing a couple of $100,000 in a day, which is most people don't do. So I thought,
Yeah.
this guy's actually genuine and honest. And, we're now having a conversation here, and thousands of people are going to watch it. And that's cool. And that's kind of building community. And I think that's what people almost lack. Like I see, like, for example, I flew to Europe 2 weeks ago on my own. So normally when I used to travel, like you chat to people, right? Everyone's wearing the
Sure.
frickin' AirPods, right? No one's talking to anyone.
Yeah.
Except for me. I'm the crazy guy. He talks to you in the lounge and when you're sitting in your plane and stuff. And people are like, oh. And then actually people really like it. And I met actually 2 really interesting people. And we chatted for like 3 hours or something in the lounge waiting for a flight. And people just don't have that interaction. And everyone else is sitting there, things in, looking down
Yeah.
and not taking
Yeah.
in the world. So
Yep.
I just encourage you, like, take off your freaking AirPods and just talk to people. You'd be surprised, like, by the nice engagements and . You have, and
I was one of the people that didn't do any of those things. This is what, like, I didn't even. So I'm a high school dropout who avoided speech class because I couldn't stand in front of a group of people and say anything. So my life has had a really strange transition since my retirement, but I do think that helped too. I think that just having some freedom and trying to figure out who I want to be when I grow up, even though I'm in my late 40s, it does something that helps a lot. And then all of a sudden you find yourself talking to people because it's like, oh, my friends are all working. So, all right, let's talk to this random person over here. And then you just start chatting and you're like, hey, this is kind of fun. Why don't I do this more? Why don't I actually try and spend time talking to people around me? And I love it.
yeah.
And I love you, man. Like, I think we're very much aligned in kind of our thought process and the things that we're trying to accomplish in life. And that's why I was excited to come on here with you for sure.
Yeah, it's same here, and it's funny, isn't it? Like we're on the opposite side of the world. We grew up in completely different places and cultures and school
Yep.
systems and everything, and you actually end up with a very, very similar outlook on life, which is kind of interesting. And I think,
Yeah, completely different starts and
yeah,
everything in between, it sounds like. Yep, very true.
absolutely. I mean, I grew up in Germany and then the UK, and I now live sort of between Europe and Hong Kong, which is obviously a completely different world. But I think we have something in common. I think we obviously enjoy finance and making money and
Oh,
sharing it, and we get a kick out of seeing people benefit from what we share. And I think
totally.
finance is such a minefield. It's such a weird industry that there is no financial education, right? It's a freaking scandal, and
No.
it's never gonna change. Like, don't even bother like lobbying for it. It isn't gonna happen. Wall Street pays far too much money to Washington to make sure that doesn't happen because it's very profitable for
Yeah.
them, right?
And it's been
If
going
you
that
know
way here in the States. It's been like 100 years,
exactly,
it's they wanted to create workers, not theologians or people that are, focused on the arts. They wanted workers, and that's what they needed. But in the future, maybe that changes because, again, with technology, we don't need all the worker bees. We might have a bunch of
mm,
robots running around. So maybe we can get some of that back. I think everybody deserves the freedom that we have.
The time
And that's
freedom,
my
yeah.
goal, is just to give that to as many people as I can.
I'm completely with you on that. Like, and it's the small things to start. I think people are often like, I used to work like 10, 12, 16-hour days for corporates,
Yep.
and you have no time to think. And the only way you get out is if you ever find some time. So I was very lucky because I was working a corporate gig and they lent me out to a customer. And those guys were working like never. I mean, it was just like so little work getting done there, like in many large companies. And I thought this is brilliant. So I planned my exit, and I would never have probably done that if I'd been working, the insane hours I have. So I think if you guys are working a 9 to 5 or a 9 to 9 or whatever it is, you just gotta like make an hour a day or something for you where you start
Totally.
that little side hustle. You start the investment portfolio or work on Upwork or whatever it might be, because that is going to give you the optionality as that grows to actually make better decisions and be able to
I
get
agree.
to
You got to have
to
time to think.
freedom.
It's really important. For me, it was reading a book, The Art of Not Giving a Fuck. And I read that book, and all of a sudden I started to look at things differently, because my entire life I looked at it as like a servant who was trying to work hard to provide to the master, this person who's way elevated and obviously just a
Yeah.
higher state of being than me. And so I worked like a slave, and I did, like you said, like all day. I would go into work at 3 a.m. sometimes.
And you built someone
Nobody
else's
cared.
business.
Yeah,
You
and I
know.
worked holidays. Nobody cared. They didn't even notice. They were gone. They were on their vacation. And the art of not giving a fuck, it taught me to say no and to try and figure out, like, okay, you know what, investing. I remember that from the dot-com bubble with my dad. I remember losing a bunch of money myself in 2008, making really bad decisions, not even knowing what options really were. And so, like, maybe I should try this again. And then that turned into me watching a video. It was like a video that was talking to, like, showing rats in a cage going through life in this music video. And I at the end of it, I just called my boss and I was like, hey man, I quit. Like, we need to figure out a plan, because I'm leaving
Yeah.
and I'm retiring. And I only had $400,000, which even where I live is not enough money to retire. But I knew the Bitcoin halving was coming in a previous cycle. And I knew the stars were aligning, and I knew I could make it happen. And so I went with it, and I don't regret it at all. And I think just even the starting point of just reading that book and looking at life differently and figuring out how to say no so I could develop enough time to think is super important. I think not enough
For
people do
sure.
that. They get caught in the, let's get the car. Well, you bought a really expensive car, and how many hours of your week do you spend paying for that? How
Yeah.
many hours a
Okay.
week do you pay for your house? How much of your life have you pushed off and said, these material belongings are worth 70% of my awake hours? And it's just
Yeah, it's
not worth
insane.
it. And I like,
Or the
unless you
the
love the
watch or the
stuff you
bag
do,
or whatever it is. Yeah.
unless you love the stuff you do, and that's great if somebody's in that. I think a lot of people are in jobs they don't like, just trying to make a
Yeah.
buck.
Yeah, I think
So
you're completely right. And I think this kind of, whether it's keeping up with the Joneses or some sort of insecurity, you want to buy branded shit. Like, I walk past, like, Hong Kong is full of luxury stores, right? So the
yeah,
queues outside the Hermes and the Chanel stores and the Dior stores and stuff. And I just think, I look at those people and I feel really sorry for them, because there is obviously something so deeply insecure or missing in them that they're willing to stand outside a shop so they'd let them in so they can hand over their hard-earned money, right? And I
yeah,
just think, like, okay, from a marketing point of view, I want to buy those shares because those companies have got it
yeah,
freaking figured out. LVMH and those guys, I mean, it's amazing
sure.
business. But from a human being point of view, I'm just like, what is it that's missing in those people to do that? Because you watch Instagram or something. I watched a video the other day, and there was some guy, really cool kid, and he said, if you make $100,000 a year, this is the watch for you. The watch was $25,000, right? And then if you make $200,000, you should buy the $70,000 watch. And I was like, are you
Insane.
insane? That's
Yeah,
pre-tax income. You're going to give half of your post-tax income basically over to buy a watch? What the fuck,
yeah, yeah,
right?
yeah.
Like, watches have, like,
Luxury
look at
tax
them,
alone.
look at the margins of watch companies, right? It's probably a 4 or 5 times markup on
Yep.
that.
Oh
So
yeah.
you just giving the LVMH billionaire more money. Like, what's the logic with this? And the only
Yeah.
way I think people really get out of that is if they start to understand the value of money. Like, I remember years ago, I read a book, really dull book on compounding. And I just remember like that really sank in. And I thought, if I cancel Netflix, which was $10 then, in 30 years, that'll be $10,000.
Yeah.
You know,
Time is a crazy thing with investing. It really is.
and it
Yeah.
makes you appreciate the little things. Like I don't have a TV. I literally don't have Netflix because not because I'm cheap, but I actually don't like how it pollutes your mind. But like with everything that you don't really value, it becomes so much money. And it doesn't mean you should live like a monk and in a basement in the dark.
Yeah.
Like we should enjoy life. But I think a lot of people just waste so much of it on stuff that doesn't really make them happy. But if you're in a job you hate, you want to buy something to make yourself feel better. And that's what a lot of the
Temporary
marketing is
gratification.
based on, right? Starbucks is the greatest example, right? You're paying, what's the Starbucks margin on it? What's a cup of coffee cost to make?
It's like $5 and the margin is like 80 or 90%. It's a crazy amount of money.
Yeah. It's a great business. And you do that because it makes you feel a little bit special in that moment. But you do that every single day. I think the average Starbucks user spends something like $3,000 a year on Starbucks.
It's crazy. And then they'll buy like gift cards and have balances with them too. And so Starbucks is like a bank. It's nuts.
Yeah.
Like, and again, it's just like you said, it's to provide like a dopamine hit of temporary gratification because life sucks.
Yeah.
And I get it.
And
I lived it.
Totally.
Or I wish I wouldn't have figured out in my 40s like I need a break from this. I wish I would have done it much earlier. But you know, you can't go backwards. You can only go forwards. So I'm happy to be here because there's a lot of people that never make it. So
I know.
I'm just grateful.
I mean, I get a lot of people who like contact us and they're like 78 and they're just figuring it out. And it's still brilliant because they're still alive and they can still enjoy themselves. No. But the sooner you get started, I think that's the thing. Like people just put it off because they're busy. Life gets in the way. It always will. It always does. And you need to just like have that really, really hard goal of being financially free and figuring it out. And unfortunately, you got to figure it out on your own. I mean, social media is brilliant for it, but no one's really going to do it for you. So you just got to make that plan and you don't accept the life that maybe your parents lived and that everybody around you is living. Like my family think I'm a freak show, right? They think I'm a really, really weird guy because I don't conform with their expectations of, work that good job and all that kind of stuff, retire when you're 65 or something, because I don't think that's what life should be about.
No. Well, and the thing is, like, compounding results don't just happen with money. They happen from success, like with a success in life too. If you put like a couple of hours a week initially towards trying to figure out how to be financially wealthier over time, and then maybe read a book, once every couple of months or whatever, set really low goals to educate yourself and to learn, and then just put money in and invest. If it's a small amount, who cares? Lose it, learn from other people if you can. But if you got to learn the hard way too, do it with small amounts, start dollar cost averaging in and learn what kind of investor you are and how
put $100 into it every week or something. Like exactly. Just get started and you'll figure it out.
And you won't lose all the gratification that you would have gotten from the Starbucks coffees. You'll be fine.
Exactly. I totally agree with you. We've got a bunch of free courses and stuff as well. If you want to check out my website, go to goatacademy.org or just look in my profile
I probably need
links.
to do that too.
It'll be somewhere. I think you're probably okay, Jesse. But people who want to get started, we do that. We also have free programs for veterans because they get particularly screwed and targeted by the nasty financial industry. So, but you just got to start somewhere and just dig in and ask questions, and you'll get better. But Jesse, I really, really enjoyed this chat. I'd love to do this more often, and I'd love for you to convert me into a Bitcoin or a crypto fan. So I think there is an opportunity there.
It's a lot of fun for me. I've been in this for about 7.5 years, so this is my third cycle. So I'll be happy to do that, and I'd love to chat again, man. You're cool.
Yeah, let's do that again, and we'll if people want to hear that, let us know in the chat. Do you want to hear this talk about crypto? Get a crypto fan to convince an old banker who knows very little about it. If you can achieve
This is
that,
my
you can probably
dream.
convince everybody. I'll be indoctrinated. An indoctrination session for Felix, 1 hour. See
There you
what
go.
happens. But no, Jesse, absolute pleasure. Thanks so much for all your insight. And obviously, we digressed a little off PayPal here. I think people didn't mind. I can see from the chat here. Thanks, guys, for tuning in. If you are tuning in from my channel, give Jesse a follow. Micro to macro with a 0 at the end, just to make it more interesting. And particularly follow his Twitter as well. It's brilliant. And
Yeah, same goes for
Jesse,
you, Felix. I'll
let's do
shoot
this
your
again.
info on X too.
Brilliant. Let's do this again sometime.
All right, sounds good, bud.
All right, take care.